Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, definitely hit like and hit subscribe if you haven't done so already, and that way you can see future videos as well. So today we're going to talk about one of the most controversial stocks, one of the most controversial companies listed in the States. No, it's not Tesla, it is Micron Technologies. So Micron Technologies is essentially a memory chip and semiconductor producer based in the US. And it has a couple of things about it that suggest it may be a company that's of a lot of interest to me. So it's currently held by a couple of quite famous value investors and investors that I follow fairly closely. So Mohnish Pabrai currently has around approximately 10% of his portfolio invested into Micron Technologies, and that's only happened over the previous 2 quarters. There's also David Tepper, who has it as a very large position in his portfolio, and he's been very outspoken about how undervalued he thinks Micron Technologies is. So there's those 2 guys have it in their 13F. They're great investors, have very good track records, and they're people that I've followed for a while. The other thing that pops up is, on the face of things, looking at some very simple sort of valuation metrics, not running discounted cash flows initially or anything like that, but looking at just things like PE ratios and price to book, it looks very cheap. They're trading right around a book value of 1 or slightly above 1. They're trading at a PE of around 5 or 5.5 at the moment. So it looks very cheap. And seeing other value investors get into it suggests it may be a company that's of interest to me, but I'm currently actually not invested in Micron Technologies, and I'm going to run you through some pretty basic reasons why, and hopefully teach you guys a few lessons about, why I'm not invested and whether that maybe applies to companies that you're looking into as well. So let's get into it. So Charlie Munger sat down a few years ago and did an interview with the BBC, and he laid out a few basic principles of value investing, and these are principles that have been reiterated in several books, especially by Phil Town and Danielle Town. And the first principle that Charlie Munger actually lays out is that you must be capable of understanding the business.
We have to deal in things that we're capable of understanding, and then once we're over that filter, we have to have a business with some intrinsic characteristics that give it a durable competitive advantage. And then, of course, we would vastly prefer a management in place with a lot of integrity and talent. And finally, no matter how wonderful it is, it's not worth an infinite price. So we have to have a price that makes sense and gives a margin of safety considering the natural vicissitudes of life. That's a very simple set of ideas.
And this is really where things fall over right away for me. Unfortunately, Micron is just not a business I understand very well. I'm lucky enough to work in sort of an agricultural technology, agricultural software business in my everyday life. Unfortunately, in terms of trying to understand Micron, I'm the agriculture guy and definitely not the software or technology guy. So I actually had a chance to talk to a couple people in the sort of team I work with in the kind of IT department around Micron, and I started speaking to one of the guys and he lost me within about 5 seconds. So it was very clear that this isn't a company that I understand all that well, and that's really the reason why I'm not invested. I don't necessarily understand the company, and although that in and of itself is something that is probably going to steer you away from investments, it has a flow-on effect of other things that I'm not able to do further down the investing checklist. So the first thing is to understand the business. The second thing is figuring out, does it have a competitive advantage? Then does it have great management? Then is it on sale? Can we currently buy it at a margin of safety price or less than it's worth? Can we buy $1 for 50 cents, for example? So if I don't understand the business, I can't work through those other 3. So if I don't understand the industry all that well, then I'm unable to figure out whether this company does or does not have a competitive advantage. It means I can't really assess the performance of the management. I can look at maybe some simple metrics like levels of debt, return on equity, return on invested capital. There's kind of quantitative performance metrics, But I can't really fit that into the story of what's happened with the actual business over the last few years. Does return on equity look very high because they've had a great last few years and they've expanded rapidly? Or does return on equity simply look very low because they've had a few rough years and it's not necessarily the fault of management? That's not something I can make an assessment on. So it's simply something that stops me from getting through that point in the checklist. And the one where it really falls over is around margin of safety and is this business on sale? So if you've watched my valuation videos in the past, basically, we need to figure out what we think Micron Technologies in this case is going to be worth maybe 5 or 10 years from now. So we need to make an estimate of their growth rate, what we think their earnings is going to be in 10 years' time, and then work backwards at a rate of return we want to make and give ourselves a margin of safety. So figure out what we think the business is worth today, buy it for substantially less than that, and it takes away a lot of the risk and potentially enhances our returns moving forward as well. So if you're buying $1 for 50 cents, there's not a lot of downside, but there's plenty of upside in that situation. So being able to figure that out with Micron Technologies is just simply something I can't do. I really don't know what their earnings are going to be like, what their cash flows are going to be like, what competitive advantages Micron has over other semiconductor companies. And I simply don't have an edge in the field. Sectors and businesses where I probably do have an edge over the average investor would be things like agriculture, especially, potentially social media. I use social media a lot. There's plenty of companies in those couple of industries and in other industries as well that I understand perfectly fine, and I probably have a competitive advantage over the average guy on Wall Street in those situations. But Micron Technologies just isn't one of those areas, and it's a reason I can't invest. So that's basically as simple as it gets. I want to run you through a couple of examples and a way that Warren Buffett sort of explains this situation in terms of baseball. So let's get into that, and then I'll leave you to your day. So Warren Buffett quite often refers to Ted Williams and his book, The Science of Hitting. So Ted Williams is a reasonably famous baseball player. We really don't have a lot of baseball here in New Zealand, so I'm going off what I know from Warren. I have watched a few games, but it's really not huge over here. So Ted Williams was a very famous baseball player. Essentially what he went and did is he broke down the strike zone over the kind of home plate when you're batting in baseball. So he broke that strike zone down into several little baseballs. He basically took kind of a snapshot of that strike zone, fits a whole lot of baseballs into that strike zone, and I'll put up a picture of what I'm talking about here. And what he figured out is that when the ball is pitched and he swings at a baseball in each of these little spots within the strike zone, his batting average changes based on where that pitch is. So there's certain areas where he's only batting, say, 150 or 200. In other words, he's only hitting the ball 1 in 10 or 1 in 5 times. And there's other parts of that strike zone where he's batting much higher. He has a much higher average. And again, I'll put up the screenshot so you can see those actual numbers. And essentially, Warren Buffett goes ahead and uses this analogy with investing and reminds investors that we actually have a couple of major advantages over baseball players like Ted Williams. So what Ted Williams was trying to say here was he's only going to swing at pitches that are right in his sweet spot of that strike zone, right in areas where he's got the highest batting average, he's got the highest chance of hitting the ball and getting to first base. And he's going to leave everything else. The only downside to that is obviously you only have 3 strikes in baseball. You can't just leave ball after ball after ball after ball until you get one in that strike zone. So he's going to have to swing at one eventually, but most of the time he's going to get one in his sweet spot in the high kind of average area of that strike zone. So that's the Ted Williams approach. In terms of the approach to investing, Warren Buffett reminds us that in investing, there are no called strikes. In other words, we can have company after company or pitch after pitch come towards us. We can make an assessment of that company and then we can chuck it away. We can continue to do that in these low percentage, low batting average companies where we really don't have an advantage, where we really don't know if it's all that on sale, whether we really don't know if it's overpriced or anything like that. And we can keep throwing these things away. We don't have 3 strikes like we do in baseball. We have an unlimited number of strikes, and that's a massive advantage to investors. So simply what you've got to do is you've got to sit there and keep researching company after company after company until you find one that is directly in your sweet spot, something that you understand, has a moat, has great management, is also on sale, and that you can load up the truck with those great opportunities when they come along. So hope you enjoyed that video. I hope you got a lot out of it. That's why I'm not investing in Micron Technologies. It's a pitch that's come towards me. It looks like it may be fat, but I'm throwing it to the side for now. I'm letting it go by. So that's Micron Technologies, and I hope you really enjoyed the video. That's all from me today, so have a great day. Cheers.